Distance has been on all of our minds lately, that we've been too close to some.
Steve and Dave use eToro to trade cryptocurrencies. Steve does extensive research
Good morning. Good morning. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. Thank you for being here. Thank you to the thumbs down guy for clicking thumbs down before I even started. Appreciate that. You're telling YouTube this is quality content, and we appreciate that. Thank you everyone else for being subscribers and for the positive energy you share with me every day. I try to do the same with you. We also try to cover technical and fundamental analysis with an overriding goal of using my 20 years of trading experience to maybe be a guide for creating trade plans. That's what it's all about, creating trade plans for really tomorrow and next week, not even today. Today you did in the past. You should already know what you want to do today. So anyways, ask questions, get involved. I'll do my best to share technical and fundamental analysis background for trade planning the best I can. Also, if you want a broker, I suggest you use tradersway.com. Visit tradersway.com and download a demo account. You can have MT4, MT5. You can have a fixed account, a fixed spread account, variable spread account, ECN account. It's your way at Traders Way. Traders Wayne. Wait, Traders Wayne? Trader Wayne. Wayne the Trader. So, where are we in the world? Oops, I'm supposed to be over here. Where we are is we expected March to be a month where we would see dollar strength, maybe some yen strength, or I should say certainly some yen strength. And maybe because of this, things like the stock market come down because that's what's part of that correlation. And so far the stock markets are struggling a little bit around the world. I think, was it Shanghai was down 3% last night? Okay. And so I think it was 2 or 3 months ago, the stock market was up because they said it was because of all the COVID vaccinations. Now, COVID vaccinations are at an all-time high, 2 million a day in the United States, and the stock market's down. So I wonder what that's all about. So anyways, what I want to look at is this. Okay. Look at the 10-year. Still at 1.5%, pretty amazing. S&P 500 down currently right now. Canada down. Okay, take a look at Europe. Europe's down, 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 DAX down. They're not big moves down, so it's not that crazy. And, okay, Shanghai was down 2%. Nikkei was down almost 1%. Okay, all right. So not a big deal, but certainly a slowdown in the up. Sound is bad again? I can't believe it. I have to unplug it every day. Seriously? There's a buzzing in the background. There shouldn't be, of course. That helped it? You gotta get the mic back into the mic holder. The shock, whatever it is. All right, cool. Well, I guess maybe it is the cable then. Old mic, bro. This is a $200 Razer. Razer's a good company. I have a Razer keyboard. Yeah, but I'm already doing that, I think, Guy. Right, this should be fine, right? Hang on. Amazon. USB cable and cord for Razer Siren mic, USB streaming microphone. All right, get it by tomorrow. All right, done. Like a boss! Boom! All right, now I got to find the YouTube. Now where'd you guys go? Oh, it's probably on the Amazon page. There you go. Like a boss. All right. No, I do not use trade journals anymore. No. No. I spent years analyzing my trading, so I know what the Wayne do. Thank you, Steve. Appreciate that. Yeah, cable will be here tomorrow. All right. So yeah, dollar strength. Good. Yen up and down. Okay, fine. So let's go to, maybe we'll start with the yen pairs first. And see what's holding up maybe the inevitable, or was that it, or what's the deal? So one of the things we've been talking about is the idea of you want up, you expect down, and how do you handle the divergence in ideas is you buy your dips anyways with the reasonable understanding of failure, so you manage that risk accordingly. So right now you might be actually doing okay, but this might roll over back down, and that wouldn't shock you in the least. Okay? And you're okay with that. It's not going to crack you emotionally. Okay? So we got some up, a hard down, and then some up. Okay, fine, good, yeah, great. That might be it. That might be the big dip, or it might come down further. We don't know. That's why you have to have a strategy for that. Okay. Take a look at this. This is another one we assume up between now and the end of the year. Okay? Or not assume, but plan for. Okay? And we're just sort of in this process here. Okay? So maybe, right? We have to pay attention. Right now, we're kicking off a monthly central. Okay? So this is a buy zone, as you know. So people obviously did a front run. The period before was a buy zone. Okay? This was not a buy zone. Okay? This was the buy zone. Okay? So right now, this is the high side of the buy zone, probably with a front run, because we know this is it. We do assume, based on seasonality, that there's reasonable chance of some down. So you'd be a cautious buyer, but we do assume by the end of the year, euro yen will be much higher than it is now. So you're buying every chance you can, with the idea that it could fail on the short run, but on the long run, you're super ridiculously right. Okay? What we're showing here is if there's going to be a bearish continuation, it'll look like that. Right now, we're in a bullish buy zone. This is the bullish buy zone. And you're like, Wayne, I don't see it. Oh, because that's set up for the bearishness. So, because I'm not really worried about the buy zone, I'm worried about the sell zone. But there's the buy zone. So, as you can see, pretty easy. Okay. On the first minute of the first day of the new month, you could be a buyer. That's it. Why does it have to be more complicated? Now, of course, it can do this, as I've been showing you, and I'm okay with that. Okay? Okay? Now, if you were mostly concerned with your winning percentage, you'd probably skip those trades, but you wouldn't be making money right now. So what's more important to you, your winning percentage or your money? Okay? Same thing. Soon as the market opened on the 1st of March, you had a buying opportunity and you were done. So now we're on March 4, and you've gone from 83.5-ish to 85. Okay? Cool. Maybe an opportunity to jam your stop. Kitty cat? Oh, was that kitty cat? That was kitty cat. All right. Did I skip pound? There we go. All right. Here's the trade plan I created for you. What do you think? Is it too obvious? We did this back in late, actually we did this Thursday. Sorry, this might have been a swing trading group trade. Sorry. That's a trade for this week. Okay. So in the first 2 hours of the week, you got yourself a buy, and you're done. You're almost hitting your target. Okay, we're on our way to 150 to 151. No, 150. Right, 149.90 to 150.16. So we're on our way to 150. Okay. Yeah, that was it. Jim says that was the last Thursday's plan. So here we are now. Today is a Thursday, and your plan for today is take profit. Right? Neat, right? Cool. So those are Oscar Mike. Take a look at these ones. Okay. Now, any other month, you might have been frustrated with this trade, except I told you don't get frustrated with this trade. Okay, so you should know better. Don't get frustrated. But anyways, identify what you know, identify your prices, all that kind of stuff. Okay. Do your job, mark it up. Okay. These are all sort of little areas as people fit in their weekly plans into their monthly plans, into their annual plans. Okay, so here we go. I think we were talking about this being a move that we expected, although it's always hard to imagine the velocity occurring as it did, but that's how it happens. Okay? Then we have the up, and we said, okay, well, that's the up we've been looking for. But also, if you're making money on this trade, don't be shocked if it comes all the way back down. How many people remember that? Don't be shocked. Don't lose your conviction if it comes all the way back down. In fact, it probably should if you're going to become a buyer of this again. Okay? All right, so my message last week, and I think even the week before, I think when we were just starting this process, so we were here 2 Thursdays ago, and I said it was fantastic that this started right on our Thursday. Like, we should be very grateful this happened, because we've been expecting it to happen, and if it happened on a Friday, it would have been a week before I was able to talk about it. But we hit the target, the thing collapsed, and then I took the mic on the Thursday swing group, and we said, this is good, this is the plan. Oops, let me try to do this a little neater. This is what we expected a week ago. Was it? Yeah, a week ago. This is what we want to do, and we will not lose conviction if it comes all the way back down. In fact, it probably should come back down before it goes up. Otherwise, it's going to be a sort of a degenerate gambling reversal. Okay? Now, that being said, think about the old trader that you used to be. You wouldn't have seen this coming, this drop, so you would have lost money in here. Then you would have been convinced this was going to make a lower low. Okay? And at this point, after almost a week, or I guess a full week of frustration, you give up. Okay? There might be some truth to how you might have thought about this market. Okay? Because now if you're selling and it heads back up, you'll really get frustrated. Okay? Guy says 1185, 118.5. Let's see. Well, ultimately, Guy, we don't actually know. So you have to take your shots. You have to take multiple shots here, okay? So we already know this one. Let me get this one out of the way. You're saying 118 and some change. Those are good too. But remember, we don't know how much it's coming down. Remember, also, it's not, right? It's not technical analysis that's occurring. If I could predict it months ago, then using weekly pivot points and monthly pivot points doesn't incorporate that data. So therefore, it must not be technical, it must be fundamental. Okay? So if you are doing something like this, let me take a shot. You're doing something like this, maybe you're measuring fibs and all this kind of stuff, and it gives you a target in here. That's all cool and such, but I don't have enough information to make that call, right? Like there's not enough variables. I can't figure that out. So that might be true, but there are many other things that might be true as well. So one of the things I have to play is that, I kind of break it down like this. Week 1, right? Week 2, and maybe week 3. So I don't know how long dollar will remain strong. So I have to take it sort of piece by piece. And if you can do something like this, that's just as valid as you doing what you were doing. I don't know where it was, how you got to 1850, but let's say, I don't know. I'll just leave it at that. This currently is our current best case scenario. Because we're not down here, we can't trade what ain't available, right? So it could be like, trying to think, not a figment of the imagination, but it only exists in our mind that would be a good buy. So what we have is sort of what we have available now. What is a tradable variable? Okay, so if you know you want to be long above 1950, then we can zoom in and say, well, 1950 is viable, 20 is viable, right? Double bottoms are viable. Next week's M2 is viable. A quick drop into the profit zone, in particular if it occurred on Monday of next week, if we're at 1950, that would be viable. But like 1850, it might be viable. It's just not a variable that we can incorporate into a current trade plan, right? It's a hypothetical out there. If we drop, that could happen. But what we have now is we are facing a double bottom. Okay. So I have to determine how I'm going to play this. And currently I could see, let's say, three likely, okay, in the next, between now and Monday afternoon. Maybe a Powell's speech, and yeah, I mean, Powell's speech, he's still going to reiterate that everyone's freaking out for no reason. Then we got NFP, and we're going to find out it's on trend. And that won't allow for much information either. So we'll just come back to next week and say, well, we're going to do what we do every year. Buy the dip. Okay? But the irrationality of the market, even if we don't like it, even if it doesn't make sense, the irrationality of the market is a variable that we have to trade. It's going to impact our trading. Okay? And right now, if it makes the dollar strong, I'm happy because I want to sell the dollar. Okay? So good. Just remember, every year there's some reason. Every year. Yeah, Gary says, if it goes any lower, it gets messy. And that is true, but only technically. Okay? So again, the message I've been giving you the last 2 or 3 weeks is don't get emotionally involved. Just do your job. So maybe this will help. Okay? Pretend you're George Soros. Or you work for George Soros. Okay? And he says, Gary, start selling the dollar for me. And you're like, well, for how long? And he says, every day till the end of the year, and then we'll decide if we want to pick up the pace of selling or slow down the pace of selling. But every day I want you to look for good opportunities, Gary, to sell the US dollar. And you're like, well, what if March isn't very good? He's like, March? What the hell are you talking about, Gary? I just want you to sell the dollar. Why are you complicating it? Well, what if I don't make money in March? He's like, I don't give a crap. Sell the dollar. I know in 5 or 10 years I'll have billions and billions in profit. I don't care what you do the next 2 or 3 weeks, except find good opportunities to sell the dollar. And I know you're good, Gary. So you're going to find good opportunities to sell the dollar. And you're not going to sell it when it's strong. But as soon as it goes from strong to weak, you're going to sell it. So then sell it. Right? And you're like, whew, well, that takes a lot of stress off me. Okay? So when it's strong, wait. And then it turns weak, sell the hell out of it. So it's kind of like that way, like there's no messiness if you trade like George Soros, where there's no chart involved at all. It's a macroeconomic play. Okay? So to George Soros, you might sell some here, you might sell some here, you might sell some here, you might sell some here. Okay? But then when it turns bullish, he'll sell more. He'll sell more. Okay? So you kind of limp in, but you know what you're doing. What would you... Oh, a good copy trading site. Why would you need a copy trader? Yeah, you should give your money to a trader that's not licensed or registered. They'll make money for you. They'll charge you $10 a month. I mean, dude, it sounds stupid right off the bat. But anyways. Mohammed says, Wayne, I watched a couple of webinars using the 5 EMA daily for a trading setup. All right. But did not get the idea for the future position. Oh, yeah, but that you wouldn't use it that way. Okay. Okay. Yeah, so Gary, what you do is if it doesn't look like good market conditions, then you wait. That's all. That right? I use quite a few, but Simon, they're all available at metatraders.com. Okay. But Mohammed, you're talking about insert indicators, custom, zero lag moving average. But you wouldn't use it that way. That doesn't quite sound right. Well, I don't know which one you're talking about. These are pivot points, so and there's some moving averages. So the pivot points, yes, are in the $5 package. That I think there's 250 files that you get for $5. It's not bad. Pretty reasonable. I was going to charge 6, but that sounded ridiculously expensive. So I decided to charge 5. Like 8 was way out. $8? My gosh. No, so $5 seemed to be about right. $4.99. If you buy now, it won't be $5. It won't be $4.99 or $4.95. But if you buy it now, it'll be only $4.82. Yeah, plus tax, which makes it $5. All right. Yeah, so this is kind of the same. In fact, here's a zero lag. That's funny. So whoever just asked for the zero lag, if you look at indicators, you'll see there's a zero lag. Cool. So you can see one is smoother, let's put it that way, because it lags a little bit more than the other one. Okay. You are not alone. Yeah. Let's do this one. Let's do Kitty Cat because we got OPEC Plus today, don't we? Oh, yeah, wait. I was going to show you something. I was going to put on my tank top and start dancing, shuffle dancing in my tank top. Wait, no, I was going to show you oil. Oh, my God. All right. So one of the ones I watch pretty frequently, I'll say, And where'd she go? Oh, over there. Is this one. Okay, to me this is a pretty indicative of oil prices, right? So in the gray zones, let me mark that with gray. In the gray zones, is that London? In the gray zones, you will see. Okay, that's the normal range, like let's say 5-year average of oil inventories plus or minus a standard deviation. Okay. And then we have actual current inventories of oil. Okay. And it's been steadily coming down. And we went from way overbought or oversupplied, really is what it is. Okay. So in this case, you have demand down, you have supply, and supply was very high, therefore price was low, and now it's picking back up. Okay, in fact, it was zero here. Okay, so anyways, we returned back to like stone cold average, and a bit of a rise again. Okay, crude oil stocks. This is supply. Okay, so when supply is higher than demand, then prices fall, right? That's straight out of the macro course. And now we have this upward movement from average towards, a standard deviation for this time of year, right? And that's interesting. Okay, that's interesting. We want to keep an eye on these things. And then, of course, the other thing, you probably paid attention to the OPEC meeting yesterday, right? And there was no agreement because they're doing their plus meeting today. Okay. International seminar. Okay. So nothing was agreed to yesterday. Wait, that's in February. Oh, yeah. No. Wrong meeting. Anyways, there was an OPEC meeting yesterday. They didn't agree to anything. So today there's an OPEC plus. So they're letting Russia and a few other trading partners in on the meeting. And they're going to decide whether they're going to increase supply. Because remember, they've been cutting supply to get prices up. Wait, I have it the other way around. They've been cutting supply to get prices up, and now prices are high, so they need to add a little bit to supply to get oil prices down. And the United States is just kicking the rigs back on. So we're not like short of oil by any means. So there is room. I mean, this is only, right, this is US. But imagine now that there is a supply gap. We're not at short oil. Okay, we're at average essentially, but with wriggle room. So they're still within a standard deviation from this mean, and we're kicking off the mean here. That you if you translated this to not to U.S. like not EIA but OPEC, they're probably looking at a production gap as well or supply gap as well. So there's room for allow them to produce more oil than they currently, and they're currently producing less oil than they can because oil was too cheap. There was too much oil in the past, and now there's about the right amount of oil with room to want to increase production. Now, why would you want to increase production? Well, two things. You don't want oil to get so expensive that you slow down the global economic recovery, but also many OPEC members are starving to death. So they're right. So OPEC Plus could say, "All right, let the Russians produce some oil. Okay, more oil than they have been. Let them do it. Saudi Arabia is going to be fine. Let the Russians, the Venezuelans, the Libyans, let them produce some extra oil so they can put some money into their economy." Okay, and money brings stability. Hoodoo says there's too much oil if it went below zero. A couple of things. One, that it was not supply and demand. That right? So that's not correct. And two, you're talking about something like a year ago. So your thought there is A, academically not correct, and B, about a year behind. So all I'm saying is sort of scratch that from the record. Like, it's not going to be helpful to your investment analysis, okay? This is what we know. If this is similar to what OPEC's looking as far as global, right? OPEC members and friends need money. They're desperate. And last year was horrific for them when oil did go to zero, but it wasn't a supply issue. It wasn't even a demand issue. It was an exogenous shock. Okay? There was a price war going on, and COVID-19. Perfect storm, killed everybody, right? Oil went to zero. So now there's oil producing economies that are emerging market economies that are desperate for cash now. Desperate for cash. Okay? So they're likely to look at this and say, all right, there's enough oil, but there's room for us to add more oil without collapsing the market. So maybe oil in the United States goes from 60 to 50 because the Americans are going to want to produce, the Russians are going to want to produce, the Venezuelans are going to want to produce, or whatever, and they're going to get this closer to one standard deviation above the mean, which is inside the normal range for this time of year. You see what I mean? That's how I want you to think, Hoodoo. We want to pull everything out, right? So just things like there's too much oil because it went below zero. It's not a helpful statement. And it's not even actually factual. So, right? So focus on what we know, not what we think. Okay? Cool. So anyways, I'm sure there's something on the... So this is now.
To keep our powder dry and to have a contingency and reserve to ensure against
Wait, does he have a Razer microphone?
any foreseen outcome.
He needs to replace his cable, huh?
May I now introduce His Excellency His Excellency the Co-Chair, Deputy Prime Minister Novak.
It's what happens when you have too many titles. People that report to you don't even remember what your title is.
Добрый день, дорогие друзья, уважаемые коллеги. Позвольте всех поприветствовать на очередном, уже 14-м заседании министерской встречи стран ОПЕК и не ОПЕК.
Greetings, Excellencies. Please allow me to greet everybody.
It's amazing,
here at the 14th ministerial meeting of OPEC and non-OPEC countries.
Да, хотел бы особо
it's amazing that
министра Абдул-Азиза бен Сальмана
the Russian Minister of Energy, or whatever his title is, doesn't speak English, isn't it? Like, you're going to go to all the OPEC meetings, and you'll be the only one there that doesn't speak English. Why?
To greet the chairman of the ministerial meeting and of the conference, His Royal Highness Prince Abdulaziz bin Salman, the president of OPEC, Minister Azevedo, and of course His Excellency Secretary General Mohammed Barkindo, and of course
this looks like our swing trading
all the heads
meeting,
of
huh?
delegations present here from each country.
За первые 2 месяца этого года мы уже провели 3 заседания Министерского мониторингового комитета, а также 2 министерские встречи. Я хочу всех поблагодарить за конструктивную, плодотворную работу, которая, по сути дела, за поддержку наших совместных
and 2 ministerial meetings. During the first 2 months of this year, we've managed to conduct 2 GMMC in a single country, and I hope that we continue in this fashion.
Сегодня нам предстоит обсудить актуальное состояние рынка и выработать рекомендации по нашим совместным действиям на апрель 2021 года. Со своей стороны.
Anyways, they're going to tell you, think about this. Why do I care about central banks? Because central banks will decide the supply and therefore the value, therefore the interest rate of a currency. Okay? Okay? Why do we watch like an OPEC meeting? They set the price of oil. So if you understand what's going on there, like imagine this, take this into consideration. What if you want to specialize as an energy complex trader? You trade oil, you trade like WTI, you trade Brent, you trade nat gas. Okay? That's all you do. Now, because you're also have a currency background, maybe you trade some Noki and you trade some kitty cat. Okay? Because to you, you're like, well, if I'm buying oil, I might as well buy Noki. If I'm buying Brent, I might as well buy Noki. It's the same thing because they're going to have to convert whatever. Okay? And so, wouldn't you want to watch the OPEC meeting? At the very least, you can talk about it with your clients. You're like, after I was on the EIA website, I was reminded the importance of really looking at not just U.S. supplies of oil, which are about normal right now, even though it's been abnormal for, quite some time. But also, OPEC has done generally the same thing through different mechanisms, but they got supply to be more normal. And they're working together as a team, and the war is over in oil prices, and now they've been working in coordination to cut supply to increase price. All of that's happened, and now we got inflation worries in the United States and all this kind of stuff, and we're at normal levels of production, and there seems to be a little bit of supply glut, not based on current demand, but on historical supplies. We're still within one standard deviation of the mean. And so anyways, I was watching the OPEC meeting, and it was really interesting what the Deputy Minister of Energy said, for Russia, as he was communicating to OPEC after they just completed their OPEC meeting the day earlier. So now they let the Ruskies in, and this is what the Russians said. Please let us produce oil. Please increase the supply. We need the money. And so, in my opinion, it looks like there will probably be a slight decline in WTI and Brent prices over the next, 3 or 4 weeks as this takes place. But then we should normalize again, and so I'll be taking some profit here in March on my oil, and I'll tiptoe back in by April. Okay? Now you sound like a boss, right? You're like, I don't know much, but I know everything there is about trading energy. Okay? And then you throw in upstream, downstream, and people are like, I don't know what that means, but it sounds like he does, so I think I'll invest. Oil-directed rig counts in the United States, which reflect crude oil drilling activity, fell from 683. Listen to this. From 683 to 172. Let me say it again. What? The lowest level since 2005? What are you talking about? Okay? Huh? Okay. Input into oil refineries. You have to switch this around, right? This is really oil being purchased by refineries to turn it into things like gasoline. Okay? So purchases fell significantly. So anyways, spend some time doing some research is all I'm saying. So long story short, I'm buying kitty cat, and I'm hoping to make money. Hoping to make money. Yeah. 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 Marina hasn't seen an Arab in ages. That's so funny. Well, yeah. That's funny. All right. By the way, I Googled this morning. I want to fly from Atlanta to Singapore because I typed in Atlanta to Hong Kong and they said I'm not allowed to fly there. So I'm like, well, will you fly me to Singapore? And they said they would. Anyone want to hang out at Raffles? The tickets were quite modest in price. I think with taxes and stuff, it was $9,000, which is very reasonable. Anyone want to hang out in Singapore? Oh, it's so beautiful and warm in Singapore this time of year, but not hot. It's just beautiful and tropical and humid. Huh? You and me and Raffles with a $28 Singapore sling? What do you think? No, Mohammed. No. Shook says, yeah. Well, I wouldn't leave Raffles. I wouldn't leave Raffles. But yeah, I guess that would be good enough. Yeah, I just stay at Raffles. I wouldn't stay for 2 weeks. Maybe one day. I'll stay one. Yeah, Sophie, you dig it. Oh, but I can't have a visitor? Is that it? Well, maybe I'll do it anyways. I told my wife and kids I'm going on a business trip. And they're like, what did you do the whole week? Well, I was really busy. Just like super busy. Really? I can't have, oh, that sucks. All right. Well, then, I guess we'll have to go to the Keys. In the Florida Keys, there's a place called Kokomo. Yeah. All right. So anyways, that's what I'm stinking. Or break even, whatever comes first. Oh, Sophie says it's officially on your bucket list. Yeah, it's nice. I'd like to see more. There's some interesting history. You know, like I was there was some. I went to a beautiful Indian temple. I hung out in the Chinese district. You know, it's like things you do in Singapore that you weren't sure you were going to do in Singapore. But like the best cigar bar in Singapore is actually in Chinatown, and it's in a bar above Chinatown, and it's not Chinese. But you're like, go to Chinatown, find this building. There's no number on it because it's basically a Chinese restaurant for tourists. But you got to walk through the restaurant and go toward the center of the restaurant, and then there's stairs. You can go upstairs. And then all of a sudden, it's dark, and there's black. The walls are black, and there's whiskey bottles everywhere, and they have a walk-in humidor. And you're like, "Wait, this ain't Chinese at all! Like, why are you guys on the top floor of a Chinese restaurant?" But anyways, it's cool. Singapore's neat. The food is fantastic. I wouldn't call it a super exciting town, though. But it's really, I mean, it's a very nice place to visit. Don't go when it's hot. Oh, Sophie, well, that's all I know are the hidden gems. So, like, hidden gems in Hong Kong. Hong Kong is fun, too. Singapore is quiet. It's probably a fantastic place to retire. I don't know if you want to go, if you want to be a college kid in Singapore. Like, I don't know if they have raves. But it's nice. People are great. The food is fantastic. Singapore is great because it has so many cultures. So you can go there and you're like, hey, I'm in Singapore, and like, hey, let's go check out a Hindu temple, and then hey, let's go hang out in the Chinese district, and hey, let's go here, let's do there. Of course, lots of history. Okay. Yeah, and I like that, Master Trader. I like that. I like a blend of cultures. You know, I grew up in a place that you were white, or you were I don't know the right word of saying it anymore in Canada, but you were Indian. So then it was Aboriginal people, then it was First Nation, and now I don't know the proper reference, honestly. But my friends were Indians, Cree Indians mostly, Blackfoot, Crowfoot, Cree, mostly Cree, Plains Indians, and that was that. That was that. Sophie says, wasn't even a college kid even when I was in college. So you're going to be that woman in Vegas dancing on the table in the nightclub when she's 58. Finally, you're like, I didn't do this when I was in college. You're like, oh, honey, get off the table. Inuit, no, Inuit's too far north. Some of my friends were like Algonquin, but historically Algonquin were from the east, not from like Saskatchewan. Master Trader says, you went to Sentosa Island? No, I'm just talking like downtown Singapore. Soviets, that's right. That's going to be funny. I can just see it. We're all hanging around the table. You're like, oh, here she goes again. Everybody grab your drink, step back. Sophie's on the table again. She said, this is my favorite song. Yeah. So anyways, this is what I got going on. Nothing's right on tone. Amazing moves, huh? Just amazing moves. Amazing moves. So I don't expect much from this. If I break even, it wouldn't be surprising to me. That's the plan. You could take a look at this from different points of view. So we could do like position trading bearish. And you can see my trade could not be any simpler. In the first hour of the first day of the month, I sold it at essentially the central pivot. It's not a good trade. It's not a bad trade. There's nothing interesting about it. It's off of resistance, right? So the market opened down, came up, and I sold it. Cool. So I survived the first pullback. Looks like I'll probably survive the second pullback. And we're kind of working our way down here. Got to get through NFB and a bunch of other stuff. But if it works out, it works out. If OPEC Plus increases production, this will probably come back up. And then I'll say, see, told you. And then you're like, well, Wayne, why don't you take profit now? It wasn't my plan, son. Okay. All right, so that's that. Just sort of meh. Okay, right? For this to come down, I need this to go up, but euro dollar doesn't look ready. It's not surprising. If you recall this conversation a week ago, I was telling you we were 2 standard deviations from the mean, and that would probably revert back to the mean, and you didn't believe me. And that's the interesting thing about trading, isn't it? You're like, how can it, we're way up here, it's been so bullish for so long, how could it possibly come all the way back to the mean? And I had explained to you, well, there's nothing on the chart, except it has every single year for 20 years. And check it out, it came back exactly to the mean. Now that's shocking. What? Yeah. Isn't that neat? So again, we can talk about it and say, well, we are now 2 standard deviations from the mean, and it's likely to fall all the way back here. Don't be shocked if it does. And the answer to why, okay, the answer to why does not lie on this chart. It's not on this chart. You're like, what could have, you might say, oh, well, it's this. Well, it wasn't, it didn't collapse then. So it can't, if this didn't fall, then why would this fall? They're the same thing. So it's not that at all. And then you're like, well, maybe because it's 2 standard deviations. No, that's not it either. If anything, it's telling you it's very bought, everyone's buying it. So why did it fall? If you remember a couple of weeks ago, okay, if you remember a couple of weeks ago, I said, can it simply because it's supposed to? All right, bad mic, right? All right. Hang on. I can't. This gets broken. I have to pull this out. Right, that'll have to do. The mic is extremely bad. All right. Maybe I can just hold it. Yeah, I can go old school. Yeah. How about that? So it's beautiful now, you're right? You're like, wow. Yeah, maybe you hear all my money. I used to have money on my desk. Where'd my money go? Shoot, the kids. Oh, there's the money. I have it stacked under my... I have money holding up my speaker so that the angle is correct. You mean this money? Wow. Hang on. You mean this money? Money, 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 money. Remember years ago, I decided to clean my desk and I found a $10,000 check. I'm like, oh shit, look at that. Anyways, money. All right. Yeah, Rick, that's all it was. So that is actually holding up my speaker so that the angle is correctly. I'm kind of pushing it up. All right. So anyways, going back to this, the Y does not exist on the chart. Okay. So I believe, and I've said over the even decades of me coaching now, right, that for you to get to the upper echelon of your trading capability, right, the upper echelon will when you move beyond technical analysis. Now, can you start without technical analysis? No, probably not. Not really, unless you are a billionaire. If you're a billionaire, we can talk, and there are strategies for you to deploy, but you're going to need as little leverage as possible, right? But then again, you don't need leverage if you're already a billionaire, so great. But if you're sort of more normal, Because remember, you're supposed to be ashamed of your wealth now. Did you know that? Wealth shaming now happens when you have more than $50 million. In the United States, you're now supposed to be embarrassed about having more than $50 million. Okay? Isn't that crazy? Okay. Oh, Giza, that is not. Okay, what did I say that made you upset? Let's go with that. Yeah. Oh, the narcissism always existed. Okay, that's what it is. Well, this is what I've heard now, that there's supposed to be a wealth shame. So, anyways, so what I was getting at is maybe if you have 50 million or more, you don't need the leverage. Okay. Oh, there is no doubt about that in the narcissistic society. Sure. All right. But don't go. Yeah. Okay. But anyways, my point isn't that if you're a successful entrepreneur, you should be ashamed of yourself. But that's whatever. What I'm suggesting here is for you to get to the next level of your trading, where you do care about things like leverage, you do care about things like drawdowns, right? You don't have so much money that you don't care about losses, right? Like normal, right? Then what you want to be able to do someday is have more in your trading plan incorporated than just technical analysis. You're going to start with technical analysis, but as I kind of talked about a day or two ago, the bigger you get, the more you'll pull away from pure technicals, the more you'll pull away from smaller time frames. You will be very happy, okay? You will be very happy to have the skill because it'll help you do what you want to do, but you'll do things on bigger time frames and for bigger reasons than let's say a MACD on a 15-minute chart. Okay, you won't even see it. It won't even exist to you anymore. But when you decide you're going to buy the Great British Pound versus the US dollar, and you see, okay, you're at a positive slope, right? M is greater than 0. You're on a daily 21, and it fits your long-term macro bullishness. You'll say, okay, that drop is one standard deviation back to a mean. You do want to trade the mean, so therefore you're going to drop into a 1-hour chart or a 15-minute chart and do what you are great at doing, and you've done it for years, but now you have a much clearer intention why you want to do it. So that means if you're great at scalping on a 15-minute chart combined with a 1-minute chart or combined with a 5-minute chart, well, your strategy is solid on a macro basis, on a seasonality basis. And now you're making decisions based on that, but you're trading it technically. Not the other way around where you're making long-term decisions technically and short-term decisions technically, right? So like you may say, okay, well, here's the great March pullback I was expecting. We fell one standard deviation back to a fair market value, but you also know the slope, right, in the fair market value is up. So therefore, it's time to tiptoe back in. Okay? It's not a deal. You're not getting a discount to them overpaying either. So you're like, okay, that's good for me. So now you drop into a smaller time frame and you do what you've always done best. Okay? And so now you're looking at things like this. Okay? And you'll say, okay, I'm going to mark this up and I'm going to grab this. The stop is always below support. It's the easiest question ever. Put it below support, you'll be fine. If you're a bull. If you're a bear, put it above a resistance, you'll be fine. The next part is you're like, oh my God, Wayne, that's 62 pips away. Well, then your entry sucks. And the other thing is lower your leverage so it's not, right? It's not that big of a deal. Yeah, Gisa said, I'm not giving away signals, but the thing is, it's not a tough question. If you're a buyer, okay, let's think of it. If you're a buyer, the the market must be going up. Okay? So you're going to buy somewhere in here, and your stop's going to go right below here, which we call support. So it's never like, it's not a complicated thing. Dum-dums will say it's always 33, or it's always 50, or it's always 25. Because now you're just randomly throwing it down there, and it doesn't make any sense. Okay? What I'd rather you do is say, okay, where's support? I bought it. Because in fast-moving markets, you won't have much of a pullback. So you want to get in, and you want to be aggressive. You want to buy. But your stop might be not 33 pips away, but let's say, how about 66 pips away? What do you do then? Not be in the trade? No, cut your lot size in half, and now your 66 pips are worth 33 as far as risk. And then when you get that profitable trade, buy the next one, and buy the next one. I'd rather you have 10 half trades on than no full trades on. Yeah, so Gary's like, oh, I got a lot of 33s on monthly front runs, but they're monthly, right? Like, you can't have a 33 pip stop on a monthly, right? Because let's say you bought it somewhere between the central pivot and M2, okay? And now your stop is below support. Dude, there's no way the support is 33 pips away, right? Yeah. No, I know. Right, good, right, but you got to learn, because you're going for 300, right? Or 300 plus. This might be a 500 pip trade to you. So you're going to go in with that? Okay? So what you should do is, if it's 100 pips, cut your lot size. Don't worry about it. Okay? The goal is to be in the trade. If you're a swing trader, or leading up to a position trader, because eventually I want you to be a position trader, I'd like you to have lots of little trades. I'd like to see you have 30 or 40 little trades by the end of the year. Okay? Because every trade you'll enter, let's say this 100 pip trade, you cut it in 1/3. So instead of a standard lot, you put in even like 3 minis. Okay, so now you got 3 minis, so it's less than, right? Now it's tiny. Okay, you trade that and you get that profitable. Then it comes down, and then you add a second one and you move the stop here, and then you come up and you add a third one. Okay, and now you move this stop here, or whatever, or you leave this one where it was and you leave this one where it is. And you get to this point where every tiny trade you take is, let's say, adds up to, if you lose on the trade, 0.01%. Let's say, just for argument. So anytime you take these losses, like, they add up to nothing, so who cares, right? But if you had, let's say, 30 trades, okay, each one had 0.01% risk, but each trade you took one at a time, then your whole account had 0.1% risk, or right? Or 0.1 risk, or whatever, right? So what I'm trying to suggest is tiny, tiny, tiny irrelevant trades. And since you don't care because they're so small and irrelevant, you're able to hold them. You're not going to freak out when you're losing, because you're like, dude, if it comes all the way back down and knocks me out, irrelevant. But you're only trying to trade in proper conditions as well. So your overall goal, let's say, I don't know what your goal is, but what if you can get 30 irrelevant trades on, where every individual trade was so small that it was irrelevant as an individual trade, but adding up, 30 of these trades are relevant. Okay? You see? And now you're like, oh, snap. Okay? Because every trade on average might produce 1% return. So at the end of the year, you made 30% return. If you did that, you are a professional trader. Master says, when you move these stops, is it the same for both weekly? I mean, all of that is a judgment call, Master. So the boldest way of doing it, Master, is move the first trade to -3, move the second trade to -3, move the third trade to -3, move the fourth trade to -3. And as far as you're concerned, you're never touching them again until you get to a take profit point in the year. Let's say end of year. And you just plan on never getting out. And that would be very true for a carry trade, for example. So you sell the USD Rand, then you get it to break even. Sell the USD Rand, get it to break even. Sell the USD Rand, break even. So USD Rand, break even. USD Rand, break even. Oh, gets knocked out, next knocked out, but you still got two. And then you sell the USD South African Rand, right? So you're buying Rand and buying Rand and buying Rand and buying Rand. And each trade is tiny in of itself. And your only goal is to get that trade. You're going to sell the USD Rand at a good price and good market conditions. And your number one goal is to let it breathe for a day or two, move the stop to -3, and wait for your next opportunity. And maybe by the end of the year, let's say weekly, like if all you did was weekly swing trades, you're going to have 50 chances to get this right. And then when market conditions are very good, you're looking at it like, oh my God, look at this USD Rand. Everything's working out the way I want. Drop from weekly swing trades to day trades. Okay? Because now you have hundreds of opportunities. Well, maybe the period only lasts, 12 weeks. So you'll have dozens and dozens and dozens of opportunities to day trade inside your weekly swing trade to build up your annual portfolio. Every individual trade is worthless to you, but on aggregate, it's going to get the job done. And now you are actually teaching yourself to trade like you had big money, FU money, all right? Shameful money. Oh my God, how shameful. You're so rich. Okay? That's how you want to trade, because you're going to meet people like that and you're going to want to work for them. Yeah, you're going to be like the pool boy or the gardener and you're just managing some money for them. Meanwhile, they go around in their yachts and their Bentleys and fly around in their jets and doing what rich people do, and you work for them. They treat you like crap, maybe. I don't know. But you just do your job. And your job is to never lose money and then produce at the end of year a reasonable return compared to alternatives. And if real estate produces 15% and at the end of the year you do 30, they like you just fine. Because remember, when the real estate market crashes, the value of that property crashes and there's no way they can sell it because it's illiquid. So once they get burned on that, they like the 15% a year until the market crashes. And by the way, it's 13-year cycle, so you should know that. So when they get burned on investments like that, they'll come to you and you'll say, "Oh, well, that won't happen to me. I'm liquid. I buy and sell money. Money is liquid. We're already liquid. You're never illiquid. You're always 100% completely liquid. You're more liquid than water because water could possibly freeze. So invest with me. I can produce 30%, and I want 30% of your 30%. And then they say, well, we'll give you $1 million. I'm like, I'm sorry, my minimum is $3 million. Oh, okay, $3 million. Great. Good, fine, good. You better bring it. Oh, I'll bring it. You won't get 3 and 30. Typically what goes down is you're like, I want 2 and 20. And they're like, I don't want to pay the management fee. Okay, well then I'll take 30. And they're like, okay, that's good. Done. Okay. Yeah, 2 and 20, you're going to get negotiated out right away. So what you do is they're like, you want 2 and 20. They'll say, I don't want to pay the management fee. I'll say, then I want 33%. And they're like, how about 25? And you're like, how about 30? And they're like, done. Okay. You can do the game theory on it all you want. Okay. 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 Simple. Cool. So anyway, so if you have designed a portfolio in which you are going to invest into Great British Pound, okay, you are starting to build your annual portfolio now. Because it has fallen. You understand that? Now is the time for you to do your job. If you're still staring at this in April, you've missed it. I'm telling you, you've missed it. Okay? I prepared you weeks in advance for a massive decline, in this case, dollar strength, and then massive upward movement by the end of the year. And I've been preparing you for weeks that this is the time. I don't know anything about the price. I don't dictate price, but I know the time. I handed out charts to my swing trading group, a month and a half ago? Is that about right? How long ago did I hand out the seasonality charts? No, but the actual charts though. I'm like, look, this seasonality about right? 5 weeks ago. It's a while ago, right? 5, maybe 6 weeks ago. So everybody knows what their job is right now. Okay. We just don't know how it's going to happen this year because we never know. But if you don't know what you're going to do, then forget it. Forget it. Right? Just forget it. If you don't know this is going to happen, and you don't know this is going to happen, then how are you supposed to succeed? Isn't it your job to know these things? That's my point. Okay? Was that right? 88 made their own. Very cool. Why is the time? No, it's exactly the same, Pete. I said something like this, Peter. I said somewhere between February, let's do a slightly different color, between February 15th and March 15th. Okay, that's the window. Feel Mabin's got the minimum investment. Okay. Yeah, if you guys got the minimum investment, let me know. Okay? In the not too distant future, I'm going to have dozens of traders working for me, trading everything both ways 24 hours a day based on my rules of engagement and Ryan's dedicated focus and consistency. It's going to be an unstoppable fund. So if you got the minimums, let's talk. All right, so here we have some movement here. So did the Russians not get what they want? If it's going up, it's likely that OPEC is not cutting. Oh, sorry. If prices are going up, it's most likely that OPEC is not increasing production. Or was it by 3M? See, they cut by 7M. Oh, you mean 3M on the money? Oh, I don't trade Euro Aussie because it's a cross. Okay. Oil. Well, what this tells me, guys, is that there's no increase. That OPEC, the market. So imagine now, I just showed you the OPEC meeting in real time. Okay, I just showed it to you. Now imagine there are hundreds of professional traders also watching the live stream, and the Russian came out and said, "We want to produce more oil." Yeah, I don't know why the "yeah" was in there. We want to produce more oil, I think. Okay? And then OPEC comes out and they're like, yeah, no. Whatever the interpretation was, it's been interpreted by the market, watching it in real time, that they're not going to increase production right now. They're going to let oil prices go higher. So if that is the case, now I don't know. I'm not watching it in real time anymore, but I showed you how to do it like a professional. Oil prices going up means they're not going to increase production. Now, they might then change in the middle of the meeting and say, no, okay, we're going to vote and we want to increase production, not, by 2 million. Okay, then it has to be readjusted. Remember, they cut production by 7 million. They can produce it. All they have to do is turn a knob, bloop, 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 and 7 million barrels of oil come out per day. So if they do 2 or 3, okay, then you can see they could have done more, so it could be worse or could be better, and you'll see prices reflect that. Okay. Oh, cool. You're doing a CFA? That'll be helpful. Your CMT? Yeah. Cool. Why do you want to do a CFA? That'd be good if you were going to be like a wealth manager. I mean, it's, a CFA is almost the equivalent in some circles to an MBA. So it'd be epic. Most people can't calculate the convexity of bond yields, right? So if you can prove that you can do it, that's great. MBA is common. Yeah, everyone's got an MBA. I was looking at the Harvard. Harvard doesn't have an executive. Harvard Business School doesn't have an executive MBA program. They have something called the Advanced Leadership Program, which is the equivalent to an executive MBA from Harvard Business School. So it's for people that are not 20, that can't live on campus for 2 years. But it is almost a 2-year program, about a 1.5-year program. And some of it's on campus, some is not, that kind of stuff, because it's assumed that you are a leader in a large corporation. And it's $75K. Not bad. It includes food and housing. Oh, Rich is going to do CFA to learn fundamentals. It has nothing to do with fundamentals. That wouldn't have anything. It's finance. Right? You'd be a financial analyst. You wouldn't know anything about fundamentals. But you should do it. It'll look good on a resume. It'll matter one day. Now, most people will say, look, it doesn't matter, Wayne. It comes down to your trade history. That's true when you're small. When you're larger, you're competing with better competitors. So it will not hurt me in the least to say I have multiple degrees from Harvard. It just won't. And so in a situation where I have to compete, so maybe I'll show a track record, and all it shows is that your volatility is low relative to your return, and so they'll find you either are a potential candidate that fits well in their portfolio or not. But it's usually not the most important thing. They want to know that you can do what you can do. And then they're going to try to compare apples to apples, right? And so then suddenly, oh, well, this guy, yet another Harvard guy, yet another MBA. Oh, all right. But anyways, I get thrown in the pile. And then someone else comes along and some school no one's ever heard of, or you don't have the MBA. What are they going to choose, the guy with no MBA over the Harvard MBA guys? No. So you just get shortlisted in a smaller pile so you have a chance. Because picking the guy from an unknown school or no degree at all, it's just a higher level of risk. And they're like, why would they choose you over them? So it just kind of keeps you in the game until you can get the face-to-face meeting. And then it comes in, and charisma, by the way, is going to be very helpful. Right? Your CFA to learn fundamentals and research. Well, look, okay, it'll tell you that A, you're educated, B, you know finance, C, you went through all three tests. I mean, you could have given up after two tests. You could have given up after one. So you have conviction. Sort of like, again, too much education just shows that, like, for example, I have follow through. Great. There's a guy that'll stick through it even when it's tough. Good. Okay. All that's good. And will anyone laugh at you that you can calculate the convexity of bond yields? No. Will it make you a better trader? Maybe you'll have a better appreciation for the bond market and its impact on currencies, right? So yeah, okay, it's good. Will it be helpful for you to get shortlisted? Yeah. So you can say, you've been trading Forex for 10 years. You have a strong understanding and appreciation for fundamental analysis as well as technical analysis. In fact, you're a CMT. You don't have an MBA, but you do have a CFA. And they'll say, oh, okay, good. Okay, good. It's equivalent to an MBA from an average school. Okay, so you should do it. No one will laugh at you for it. It might make you a better trader if you understand market mechanisms, but how many discount cash flows are you going to have to do to get that, to get the designation? But the Series 3 had very little to do with fundamentals. It had a lot to do with regulation, but it also had to do with hedging with futures and options, and it was good. I'm glad I did it, and most people fail it, so I'm glad I proved I could get through it. Did it make me a better trader? Maybe indirectly. Yeah, maybe indirectly. But it's not fundamentals like I didn't learn how to handle like what's happening right now. There's stuff going on at the Fed we're debating. There's stuff going in the market that we're debating. There's things going on in the bond market and yields that are going on that people are debating. And I have to filter through all of this and make decisions on top of my other experience in the market as a trader, maybe things like seasonality and stuff like that. And I have to put all that together and make decisions. Did my Series 3 help with that? No, it did not. Would your CFA? Probably not, but someone might pick you to invest into you simply because you do have a CFA. And I know there are many, like, let's say you want to work at Goldman Sachs in whatever department, okay? Even as a wealth manager or as a trader or something like that. Let's say you're going to work in the capital markets department at Goldman Sachs, okay? They're going to say CFA, MBA or CFA desired, which means you'll get shortlisted and have a chance to get a face-to-face interview. Maybe you have a chance to get the job. If you don't have one of those, you don't get shortlisted, you don't get a chance to do a face-to-face, and you won't get the job. So you have to compete, right? So that's, and by the way, that's what capitalism is about. You have to have a better product, a better service, better price, combination of all of those things, and somehow your people are happier, better paid, more dedicated on top. And so you have a better culture, and like everything is better with capitalism, because if you're not better, someone is better and they're going to get the money. Okay? So you always have to improve. So if you're going to get a job or raise a fund, you have to compete, so get the CFA. Because most people don't have it. It's too difficult. Good, you should do it. Okay? No, not a trader at Goldman Sachs. No. If you're a fund manager. Okay, so like, for example, I was asked to become a general partner at a VC. So general partners, okay, raise a fund, let's say $100 million. Okay, a small fund. That's a tiny venture capital fund. Okay, where do they get the money? Okay, they actually would get the money from someone else. So we call that limited partners. Okay, limited partners put in the 100M. Okay, general partners make the decisions on how to make an investment. So now, when a general partner goes to a limited partner and says, give me $100 million, the limited partner is going to want to do whatever they can do to ensure that they don't get screwed on the deal. Meaning these idiots don't burn the money investing into dumb ideas. Okay? So what could you do right? So there's a lot of provisions that you can put into the contract. The contract between the limited partner and the general partner, but also the general partner and the startup companies that you invest in. Okay? So one of the provisions a limited partner would ask for a general partner, just think about it. Okay, I'm going to give you $100 million of my money. How much of your money do you have into this? And you're like, well, I don't have any money. I'm dead broke, but I can make really good investment decisions. And they're like, well, what do you mean you make good investment decisions? You're broke. You're like, yeah, well, I did it on a demo account. They're like, what the fuck are you talking about? You want $100 million? And you're broke. You're poor. Oh my God. Right? You're bagging groceries by day, but you love trading the Asian session at night, so give them $100 million, right? Like, think of it that way. So anyways, so they're like, no, dude, there's just no way. So typically there's a provision that at least 2% of the fund has to come from the personal capital now of the GPs. Now, there's ways around this and tricks and all that kind of stuff in the contract. There's a way to do it. But I remember one of my board members from one of my startup companies, she's like, she's one of the best venture capitalists in the Silicon Valley, right? She was a general partner, an investment person for quite a few years at a great firm, and then she became a GP, and then she moved on to being another GP at a different firm, and each time it got bigger. And I remember talking with Susan about things like she would become the vice president of engineer for one of her investment companies and get business cards printed and everything and go and close deals. And like, she got really involved and became very successful and all this kind of stuff. And her husband almost became the CEO of my company, actually. So I met him and I hung out at their house and all that kind of stuff. Typical high-tech kind of stories. But I remember talking with her about, needing $1 million in cash. They needed $1 million in cash because, she was becoming a GP or was being asked to become a GP in a different firm. And, and they're asking 1% from each partner. So, it was just kind of a deal. So she was putting in $1 million into that, but it has to be cash and all that kind of stuff, right? And by the way, she went on to be like huge, right? She's like the head of the Kaufman program and stuff like, wow, she's really done well for herself. Super smart, super dedicated VC. But you got to have like at least drop $1 million or $2 million, or if it's a big fund, many millions, just to be the partner. And so I guess when was it? In November, I was asked to be a general partner at a VC firm. And I got the contract and I went through it. And sure enough, I think I needed 2M. Standard operating procedure. Okay. Now you're saying working at Goldman Sachs, you're just an employee. Right? You're just an employee. So no, most likely you don't need any capital. Okay. Goldman Sachs puts up the capital. Okay. But how does a venture capitalist make $20 million? Okay, they put in their 2. Okay, they put in their 2 and invest into a unicorn and sell it for $2 billion. And right, remember, they're investors now. They have money in the fund. They don't get rich on salary. They have their own cash in with the limited partners. So you make a good investment. You put in, $4 million into a company that turns into $4 billion. And of course, there's some add-ons. So maybe you got 12 into it by the time it goes here. And now, you made 200M or 20M, more like 20M, right? And your 2M turns into 20M. So you'll never get rich being a venture capitalist. You'll get rich because you invested your own money into your own fund, made a good investment, and sold that either to the public or to a corporate buyer for a huge, ridiculous amount of money. You sold your crappy company to Microsoft for $2 billion. Laughable, but that's what Microsoft does. Hey, let's pay $2 billion for Minecraft and make sure no kids ever play it again. Thank you, Microsoft. Okay? So, right? And that's how you make money, because you got money in the fund, right? So if you were going to design with multiple traders in it, you have to design a fund so those traders have capital in the fund, okay? Similar to a general partner, but not as a general partner. So there's different forms of this, right? Okay, you won't be a general partner, but you'd be a trader, and all traders beg, try to negotiate for their own capital into the fund. Not just earning your percentage of a percentage of a percentage, but actually having your money in the fund along with the limited partners. Okay, because right? Everything's going to be done so that these guys succeed. Now you want to succeed with that too and get the benefits of all that kind of stuff. Right? So that's how you want it to work, because nobody will ever make you rich. I want you to think about that. There is no person or company on this planet that will make you rich. It doesn't work that way. It's not designed that way. Okay? Now, if you work for a high-tech startup and you work in it for 2 years and then it goes IPO, well, the CEO didn't make you rich. Okay? They sold the company to the public and you were an owner. So how rich you are depends on how much you own. Well, being a trader is equivalent to having your own money in the fund, because not only are you trading the fund's money, but you're an owner of the fund per se. So it's like having pre-IPO shares in a startup. You walk in and you're like, I won't work for you unless you pay me like $52,000 a year plus options. And they come in, they're like, we'll give you 100 options. Meanwhile, they hire you, and the other guy says, I'll work for $52,000, but I want 10,000 options. And they're like, okay. So when it comes to IPO, who makes the money? You negotiate 100. This guy negotiate 10,000. Okay. You drive a Hyundai, and this guy drives a Bentley, right? They negotiated more, so they're a bigger owner. So it comes down to, it's, right? You sold. You have to sell this to somebody. So you have to have skin in the game. Okay? So no one will ever make you rich. No company will make you rich. You have to be in the game and then create massive levels of value. But you won't get rich quick, even in a scheme like that. Do you understand that? It will not make you filthy, stinking rich. It will not get you on private jet planes. Okay? You will not earn enough to drive around a Rolls Royce unless the only thing you own is a Rolls Royce. But it'll put money in your pocket. You'll do what you love. You'll learn how to create value. And most likely you'll go out and start your own fund. And you'll start by putting in $2 million of your own money, raise 100M from somebody else, and go to work and turn the 100M to 300M. And now you're thinking, if I can keep this up, I get my jet plane. But you got to be an owner. Employees don't get rich. Employees get rich because they owned and then they sold their ownership in exchange for cash. And then most likely they're going to quit their job. The number 3 employee at Netscape worked for me personally. I personally hired her. Number 3 employee at Netscape. She knew Mark Andreessen and Jim Clark. And she got a phone call. And she showed up. And it's Jim. And he's like, hey, we have this thing called Mosaic. We've been mailing it to a whole bunch of college kids. And we need help. And she said, well, are you asking for feedback? Are you doing like a beta test? Are you following up with them to find out ways to improve? And they're like, you can do that for us? She said, sure. All right, you're hired. So Jim Clark and Mark Andreessen, the 2 founders, hired her. She was actually the first one they hired. So she was employee number 3. Okay? Isn't that interesting? So when I hired her, what she had done is bought her parents a house, bought herself a house, bought herself a car, and stuck all her Netscape shares into a trust where she couldn't access the money until she was 40. Because Jim Clark sat down and gave her that advice. All her friends became real estate investors, gone bankrupt. High-tech startup investors went bankrupt. cocaine investors and gone bankrupt. She was working for me. I think I hired her when she was like 37. And she's like, Jim told me I need to keep my life focused. I need to be interested. I need to be involved. Yeah. So after she worked for me, she had $100 million in cash because she worked for me. Right before she could access her $100 million. She was cool too. She was cool. I almost bought her house. Very, very close to buying her house. Because she's like, dude, I'm moving to the Redwood Forest. I got $100 million showing up. How cool is that though, huh? Oh, right on. Richard, that's amazing. Your first 100 pip trade. Awesome, dude. Wait till you get your first 1,000 pip trade. How funny is that? Your first 100 pip trade. By the way, on pound yen, you can make a mistake and make 100 pips. So, very interesting. Good luck. Yeah, so this is still stalled out. Okay, let's go in here. Pigs get slaughtered for sure. Yeah. Yeah, it's kind of interesting. Your first 100 pips, huh? Cool. So that was simply our swing trade last week in the swing trading group. So if you guys like this, like look how clear it is. If you like this kind of stuff, why don't you join the swing trading group? We're meeting today at 2 p.m. Eastern time. How many people here are in my swing trading group? Anyone willing to raise their hand? We meet at 2 p.m. to plan out next week's trades. This is just one of the trades. Sky Killer, Robin and Steelin. Ricky, Gary. Four out of 5 gyms. The first step is join fxbootcamp.com and watch all the videos. The second thing is upgrade your account to access the live group. Pretty simple. Jackie's doing tiny lots. Great. That's all you need. Richard says he's trading one mini lot to gain confidence. So that means you have at least $10,000 in cash in your account. So very cool. Does it cost money to join? Yes, sir. How do you get into the group? Let me explain it again. You go to fxbootcamp.com, you insert a credit card, and that will unlock all the video training courses. Then it'll say, hey, dude, welcome to FX Bootcamp. My name is Wayne McDonald. I am your leader and your guide. If you'd like to join our live trading group that meets every Thursday at 2 p.m. to set up trades worth 100 to 300 pips each, click here now. It's $99 a month. Right now we meet on Tuesdays and Thursdays, most Tuesdays and every Thursday. Yeah, and you will almost never get an email from me, which is funny, right? Because usually when you buy something, you get into somebody's sequence all of a sudden 3 times a day. So look at this, guys. 3 weeks ago, this was the plan. Last week, this was the plan. Cool. So anyways, I hope to see you guys over there. 2 p.m. Yeah, it's almost 10. I guess I better go. By the way, tomorrow's non-farm payroll, so I'll see you guys over at non-farm payrolls at fxstreet.com tomorrow. Okay, so no Forex.Today webinar tomorrow. It will be at the FX Street YouTube channel. If you're in my live group or in the professional track, either way, I will see you at 2 p.m. Eastern Time to set up next week's swing trades and to see how much follow-through we have on our monthlies. And I'd like to thank you for being on my team. I'd like to thank Traders Way for being our sponsoring broker. Please visit tradersway.com, at least to open a demo account. Just show them, say, hey, man, really appreciate this Forex.Today. Thank you for being there. Open a demo account. That's how you show your thanks. Okay? And if they earn your loyalty and respect, then maybe you invest real money with them one day when you need a real broker. So, peace on earth. May the pips be with you. May our profits be above average.